They raised billions to become the next Tesla. Celebrities backed them, investors poured in cash, and their electric SUV was supposed to change the world. But less than 2 years after going public, it was all gone. This is the shocking rise and catastrophic fall of Fisker, the billion-dollar EV empire that crashed and burned. In 2020, one company promised to do the impossible, build a sustainable, affordable electric SUV that could rival Tesla itself. Its name was Fisker, led by legendary car designer Henrik Fisker, the man behind iconic cars like the BMW Z8 and the Aston Martin DB9. This wasn't some no-name startup. This was a visionary with pedigree, billions in funding, and a car the world couldn't wait to drive. Fisker went public, its valuation soared into the billions, and everyone believed they were witnessing the birth of the next great American automaker. But within just a few short years, it would all come crashing down. Fisker did everything right, at least on paper. They went public in 2020 through a SPAC merger, instantly raising over $1 billion. Their flagship vehicle, the Fisker Ocean, was stunning. It boasted a solar roof, vegan interiors, impressive range, and a price tag that undercut Tesla. Pre-orders flooded in. Tens of thousands of people put down deposits. The hype was real. Fisker's strategy was genius. Instead of building expensive factories, they'd outsource manufacturing to established giants. Low overhead, high potential. Investors were convinced this was the next Tesla in the making. At its peak, Fisker was worth several $billion, and Henrik Fisker was being called the visionary who would finally challenge Elon Musk. The problem started with the one thing that mattered most, the product itself. When the Fisker Ocean finally reached customers, the reviews were brutal. Owners reported terrifying software glitches, cars that wouldn't start, sudden power losses, faulty brakes, and doors that wouldn't open. Reviewers who once praised Fisker now tore the car apart. But it got worse. Because Fisker outsourced its manufacturing and had no real dealership network, the company was drowning in operational chaos. They couldn't deliver cars efficiently, couldn't service them properly, and couldn't manage their own inventory. Fisker didn't even know how many cars it had sold. Cash was burning fast. The company slashed prices desperately, cutting the Ocean's price by tens of thousands of dollars, infuriating the loyal customers who paid full price. Investor confidence evaporated. The stock, once trading high, plummeted towards zero. In June 2024, Fisker filed for bankruptcy. Just years after its billion-dollar debut, it was over. So what killed Fisker? 3 fatal mistakes. First, the outsourcing trap. By not controlling its own manufacturing and sales, Fisker had no grip on quality, logistics, or customer experience. Second, rushing a broken product. They pushed the Ocean to market before it was ready, destroying their reputation with glitches and recalls. Third, burning cash with no plan. Fisker spent aggressively while revenue stayed low, and when the EV market cooled and interest rates rose, the money simply ran out. Thousands of Fisker Oceans were left stranded, some sold off for a fraction of their value. Customers were left with cars that could barely be serviced. And a once celebrated visionary watched his second car company collapse. Because yes, this wasn't even Henrik Fisker's first failure. The story of Fisker is a warning to every ambitious startup chasing the next big thing. Hype, celebrity endorsements, and a beautiful product mean nothing without execution. In the brutal world of car manufacturing, dreams don't build companies. Discipline, quality, and cash flow do. Fisker had the vision. It had the design. It even had the money. But it couldn't deliver. And in the end, the EV empire that promised to change the world became just another cautionary tale. The dream is dead, but the lesson lives on. If you enjoyed this breakdown of business rises and falls, smash that like button, subscribe, and tell me in the comments which billion-dollar collapse I should cover next. See you in the next video.